Okay, good afternoon, everyone. Hope you're enjoying your day. Thank you so much for joining us today as Fogel and Potamianos presents our 2024 Competitive Capital Investing in Sports and Sports-Related Businesses webinar. Thanks for joining us today. We have a very exciting all-star panel today. We'll get straight to it since we're starting a few minutes late. If you're joining us today, we will be recording this webinar and we will send it out to each one of you attending, and you can feel free to share it with whoever you like. All right, let's get our intros in. We'll start with our all-star panel. We've got Heather Brooks Karatz. It's always so great to have another woman on the webinar with me. I'm usually outnumbered here, so thank you so much, Heather, for joining us. Heather has 20 years in sports and entertainment. Her resume is extensive and very impressive. She is a CEO at Hextec Incorporated, part owner in Angel City Football Club. Heather, why don't you tell us a little bit more about yourself?
Hi, Christina. Great to be here with everybody. Thanks for having me. Excited about the conversation today. 20 years, a lot of fun in the sports and entertainment landscape, and excited about the conversation today. But I think I get to wear the hat of the person who has sat on more sides of the sports industry than anyone else. I started at leagues like the NFL and the NHL doing as a labor lawyer and doing collective bargaining and resolving disputes, and also helping with one of the seasons in the NHL where there was a work stoppage and doing a new CBA. I retired as a lawyer and moved over to the business side, working at agencies, did a roll-up of agencies to build Relativity Sports several years ago, which was kind of one of the first agencies to really think about what can athletes do off the court or off the field, and how do we build bigger brands for them. From there, joined the management team of the Los Angeles Football Club and built what is now BMO Stadium in downtown Los Angeles, wearing multiple hats over there. But anything, when you think about a business like that, where you have a really dynamic set of investors who are thinking about what the future is for MLS and soccer in the United States, what sports look like in Los Angeles, what a new venue looks like in Los Angeles, we had to put a lot of interesting pieces of the puzzle together, from launching a team, building a stadium, a training facility, restaurants, retail, freeway billboards, all on government land. So fun ride, but luckily had a very successful run. From there, I left to join Vince McMahon in the relaunch 2.0 of the XFL, helped build the league infrastructure, and then went to run the LA team, the LA Wildcats. Go Wildcats. For anyone who came out to a game, it was a great experience, something that was really accessible for a larger community here in Los Angeles. I've done a lot of work across private equity and venture capital in terms of advising and launching various businesses. Along the way, I spent a couple years at United Talent Agency, where I helped lead growth and M&A, did a lot of investing for the firm, thinking about organic and inorganic growth opportunities, both domestic and international. And about 2 years ago, have set out on my own, launching a couple different businesses. I'm an owner in Angel City Football Club, so look forward to chatting about women's sports, and also what I'm doing in the investing and data and technology space.
I told you guys, see, I told you, extensive and very impressive resume from Heather. It's so great to have you. You could just give us a quick one or two things of something that's going on in your world that's super exciting right now. Would love to hear that.
Well, I'll tell you about a quick venture project that I'm involved in. It's called Shake, so I hope everybody will check it out. We are now publicly launched. We are live in the App Store, or you can go to my LinkedIn and you can find a link to download it. But basically, I was really intrigued by what's happening in the sports betting and sports gaming space, and felt like there really wasn't a platform that was speaking to a broader sports and entertainment community that wasn't quite comfortable with the barriers to entry into sports betting. So we've built a free-to-play sports game where you can hang out with your friends, participate in contests. It's very social, accessible, and fun. You can participate in sports and entertainment contests, and then win brand prizes. So instead of risking cash to win cash, you can get dinner on DoorDash or dinner on Postmates. And it allows brands to participate in an ecosystem that is brand safe. And from the back end perspective, there's a really interesting data opportunity of the types of information that we're collecting, where consumers are happy to share because they're getting something of value for their participation on the platform. So please go check it out.
That's amazing. Thank you so much, Heather, for joining us today. All right, we've got Alex Cooley. Alex, you're Director of Strategic Investments at the NFL for the last few years. Alex, you're a returning guest on our webinar. It's always great to have you and your insight. Tell us a little bit more about your background.
Thank you, Christina. I appreciate the kind intro. So as Christina said, I am the Director of Strategic Investments at the NFL, or 32 Equity, which you may be familiar with. What we do is a few different activities, one of which is principal investing on behalf of our owners. So think of this as we have dedicated almost like an endowment-like structure for our owners, that we're investing in really high growth companies in the sports ecosystem that are strategic to the NFL in some way. And then also others, often joint ventures, where we'll leverage NFL assets and/or IP to really stand up new businesses that then can participate in white space opportunities across sports. And then lastly, we work across really across the core business strategy of the league as really a corporate development arm and strategy group. And so just a little bit about me. I started off in investment banking and private equity before being in the NFL for about 3 years now. And in terms of the work we've been doing since I've been here, I think some of the most exciting investments have been we created a new entity called Skydance Sports in combination with Skydance Media, based in LA, like some of you folks, really focused on driving new sports content, particularly NFL content, and amplifying a lot of the really great storytelling that the NFL does through its dedicated films platform, Skydance Sports, but through its platform NFL Films, but with Skydance Sports now doing a lot more scripted content and creating more content overseas and really reaching new demographics and audiences that weren't traditionally football fans, but really giving them access to the game. And so it's investments like that have been really exciting. So we have some other examples, a company called Everpass, which is another joint venture that is focused on really changing the environment for commercial establishments in terms of just making it a lot more of a dynamic watching experience for viewers and making it more seamless for those commercial establishments to access sports content as more and more sports rights move towards digital platforms. And then a handful of other investments, including that I'm involved in, including things like Hyperice, Noble, Fanatics, really across the gamut, across the sports ecosystem, but that is tied to the NFL in some way. So I'll pause there, Christina, but hopefully that a little bit helpful on my background and the work I'm doing every day.
Very helpful. And tell us something exciting that's going on in your world right now.
Sure. I think one thing that we're starting to take a look at is flag football, just holistically across the league. And you've heard our commissioner talk about it. How can we get more people to play the game at the youth levels? And also, how can we get more people engaged in the game, especially internationally, where the NFL, while it's by far the #1 sports league here, there's a lot of room to grow there. And we see flag football as one of the ways to a really important part of that pipeline for developing new fans for our future. And so we're starting to think strategically about how can we invest in that space, what role should the NFL play? And that's been a really exciting project.
I think that could be a really lucrative thing. As a mom of a flag football player right now and seeing all the injuries that are happening in the NFL, I would definitely be interested in that. And then when you guys are ready to start your co-ed professional league, I'll sign up.
Glad to hear it.
All right. Thank you so much. And welcome back, Alex. Andrew Costa is a partner at RX3 Growth Partners that focuses on consumer growth equity funds, investing in all things consumer, and also a board member at Therabody. Andrew, tell us a little bit more about yourself.
Yeah, hard to back up these two, but I guess more similar to Alex. Started my career in the Air Force, but then quickly transitioned to investment banking. Really, where does consumer meet technology, and where are those friction points, and what companies are solving that? So, handful of IPOs, M&A. You guys know the deal, but along the way, got to know the partners at RX3. And thought that the concept was really novel. There's a lot of consumer growth equity funds out there that are playing in the consumer space. But what RX3 does different is our LP makeup is mostly professional athletes, heavily weighted towards the NFL, but athletes, celebrities, entertainers, folks that when we make an investment, we can really lean in with these, folks of influence. And not everybody leans into every investment, but we usually find 4 or 5 key names that can really drive, revenue, awareness, everything within our investments. And so as it relates to the conversation today, not to give a macro backdrop, but really seeing that authenticity play through from the athletes, from the field to the investment side. And that's critical because, some of these contracts are just massive now. So you might have someone who's 28 in the NFL that's a centimillionaire running a family office and having to lace up the cleats on Sunday. So we work with them not in the private wealth management side, but much more on if they're accessing consumer growth assets and really excited about something, our fund is, kind of leading the efforts there.
And tell us something exciting that's going on in your world right now.
It's been a murky past 24 months as kind of tectonic plates shifted and everyone's hiding under a desk. But I can honestly say we're seeing a great defrosting of just growth assets. And I think a lot of that, I will say AI, but just technology and specifically of sports, like, having fans versus customers is totally different. You have people lined up in the stadium. What are those concentric circles that you can invest in, whether it be with the actual sports team, which I know we'll talk about, or beyond that really are riding this wave. And so I think as we're looking across the consumer universe, we always look for things that breed out of sports, because health, wellness, active lifestyle, where we spend time, generally has some sport tie-in.
Amazing. Thank you so much for joining us today, Andrew. And we've got the partners here at Fogel and Potamianos. We'll start first with Jerome. Thank you so much, Jerome, for always looking for opportunities to have webinars that people can just glean some great knowledge, insight from. So Jerome is the co-founder here at Fogel and Potamianos, the corporate practice group, and he's the head of our sports and entertainment division. Jerome, tell us a little bit more about yourself.
Yeah, I think, there's really a great intersection of M&A, venture, and sports for us. So we have a robust corporate M&A practice and a venture practice, and we have this niche sports practice, typically sports family office. And so what we see is, athletes that they want to start their own companies, they want to invest. Some are interested in getting involved in venture. And so really there's this new world that opens up when sports is involved. And I think it just supercharges a lot of what's happening right now. As Andrew had mentioned, kind of things are thawing a bit in venture, but I think sports is extremely hot. The assets are very hot. And so I think it's a really good space for us to have these conversations because these are things our clients are interested in as well.
Awesome. Thank you so much, Jerome. And then we have co-founder and my co-host, Constantine Potamianos. He is the head of our corporate practice group, and he's got such an amazing background. You are part of the military. You have also background in corporate and securities, and you have an extensive investment banking career, Constantine. Tell us a little bit more about yourself.
Oh gosh. Well, first of all, I'm backing you up as co-host here because you're
Okay.
doing a simply fabulous job. But my background, I head up corporate here at F&P, and Jerome touched upon many of the things that we do in the space. But I think what Heather said kind of struck a note with me in saying that she sat on all sides of the table. And that's something here at F&P that I think sets us apart from most other players in the legal game, because each one of us comes from eclectic backgrounds that go beyond just the law. As Christina alluded to, I spent time as an investment banker, spent time obviously as a corporate and securities lawyer, served on management of companies, both public and private, served on the boards of directors of these companies, and have also been an investor in companies as well. So, and obviously made investments in companies. So I think what differentiates us and why we pull these panels together is because we, unlike most law firms, do take a very holistic approach in that we try to distinguish the forest from the trees. Because we've sat on each side of the table, we look for what we think makes business sense at the end of the day, and not necessarily focus on just particular legal things, which we're very good at. But sometimes lawyers lose sight of what the end goal is. And we, to use the sports metaphor, are always looking to get that touchdown for our clients, and we focus on what it takes to get to that end zone. So that's a little bit about me. Nice to see fellow veteran on the thing. I'm an Army guy, but I will say that we always enjoyed using the facilities at Air Force bases whenever we could, because you guys knew how to do it right.
Build the golf course first.
Yeah. Anyway,
Oh, well,
that's it about me.
oh, well, I appreciate it. Constantine helps with any awkward silence moments, but he also asks great questions. We call him the sage over here. All right. Well, as we dive into our webinar and explore just talking more about investing in sports and sports related businesses, some of the things we'll be talking about are the strategies and lessons that each one of our panelists may have learned and where the opportunities might be. And I just want to throw this to you, Alex, as we start, like, what are some of the key trends that you're seeing with the sports investment landscape? Where are you seeing opportunities?
Yeah, sure. So I think, one thing when I think about the sports investment landscape and coming from the perspective of a mature rights holder like the NFL, you really got to think long term is like, what is the media strategy? Because that's where the bulk of the dollars for the professional leagues comes from, at least for ours, other ones like the MLB, a little bit less so, more focused on the in-person attendance. But overall, you really have to have a media strategy to succeed as a sports entity. And I think we're obviously in this really unique environment where you still have the traditional players, the linear television, which are the bulk of the consumption for sports, but overall, from a macro perspective, are clearly going the wrong direction where they're shedding subscribers, and longer term, there's concerns about some of their financial performance and overall longevity. So as a sports league, you have to really be focused on also how do you continue to meet fans where they are, which is both on linear television, but also more and more on some of these newer digital platforms. And streamers, which we've of course seen have gotten more and more into sports. I think the NFL was a leader in that with I think starting with Thursday Night Football, getting Amazon Prime involved and ultimately taking over that package. But now I think you're seeing things like Netflix, which they had the fighting event last month. They have the NFL game coming up later this month on Christmas, which it's actually 2 games, which I think will be really exciting and a new holiday experience for fans. And so I think amid that changing environment, there's a lot of opportunities for investment, whether it's in platforms that fans are accessing, or from a league perspective or a club perspective, where it's how do you leverage this changing environment where you're navigating the decline of the RSNs, you're navigating the slower decay of cable, while also the rise of the streamers to really increase your media value. And I think some of like the way that the NFL and the NBA have been able to capitalize on that has really led to a lot of that increase in valuations that we've seen. And because of that, it's led to sports being seen more and more as an asset class amid some of this growth and valuation. And it's almost a virtuous cycle where then you have more capital coming into the space. And that's really furthered the growth. And I think even more so, you've seen a lot of institutional capital, which I'm sure people have seen the NFL opened up to earlier this year. But to me, I'll love to have others chime in, but just speaking from the media perspective and the kind of major rights holder side, that's some of the key trends that I see that investors should be aware of.
And are you seeing this, there being like a broad appeal? Maybe Andrew, we can throw this to you. Is there a broad appeal here, or?
Yeah, it's a little bit of a show me the money effect. I think the only partner at RX3 that doesn't have sports team ownership, and that's outside of the big four. And where I've seen a lot of our LPs partners going is into women's soccer, WNBA expansion teams, things like that. But really going in with a mindset of a holistic investor, knowing that media rights will follow. That's a certainty. But they're not going to be the last package, Alex. I don't know if it's like $100 and something billion for the NFL. They're trying to make it work with $2.5 million in media rights. And so what are those tangential things that they can invest in, be it real estate, be it different corporate sponsorship packages, things that are really going to help their investment, while the appreciation of the team via media rights goes up in the background. And so where I've seen actually a lot of investment come in is, let's build a new training facility. Let's really invest in the downtown of Sacramento. One of our partners is a principal owner of the Kings and has probably made more money on the real estate in downtown Sacramento than the actual team appreciation. So getting really creative around team ownership, and really, you have this fan base that's coming, they're fervent, they love the sport, but they need to eat, they need to stay here, they want a nice location. The team, it really matters at this point. If you're an athlete and you're going to a city where they just don't have the best in class equipment, training facilities, they might think twice. And so I think you taking a step back, and I think, Heather, you probably have seen this firsthand with Angel City, really investing around the ecosystem versus just what's on the pitch.
I mean, I'll just jump in for a second. If you strip all the layers back here, what you're really talking about is we're in a moment in time where the consumer wants experiential opportunities. They want to be able to go experience things more than they want to buy a pair of shoes or a handbag or whatever it may be for them. And they want community, right? And they want to be doing that with their friends and family in their free time, and not just where they just show up to something for, to entertain their kids for an hour, but a place where they feel like they're building connectivity and stickiness to come back over and over and over again. And there's no better place to find that community stickiness than a sports ecosystem, than a fan base, right? And so what's happening is all these sports teams, leagues are really just a bucket of IP, right? And so when we take a bucket of IP and we put it in what is today's landscape of experiential, community-oriented activities, we now have to think about, well, how do we unlock that value of the IP for what the consumer wants today? Because it's very different than what the consumer wanted 50 years ago. And even when we talk about media rights, of course, hugely important, but it's a prime example of how the consumer today is consuming that sport from a media rights perspective very differently than 20 years ago. And that's where all the shifts are happening.
Heather, you make an excellent point, and maybe for the benefit of everybody on this webinar, what are some of the key differences that you're seeing in terms of what the consumer wants now versus what they previously wanted?
I think if you start with media rights as an example, I mean, I was involved in a business that is no more, but I think the idea was a really good one, called Buzzer, right? And Buzzer was a platform that was built to say the next generation doesn't want to watch a 3-hour game. They want to watch the 2 minutes that they care about. They don't want to try to find the game and figure out where it's on, how to find it. Do I have to subscribe to something new? Like, that's too much work, right? So the idea was that you're going to get a pop-up on your phone, Lakers down by 2 minutes left. Do you want to watch? Swipe here and you can consume the content, right? And it's a very personalized experience. It's all about microtransactions. And while Buzzer had its own sort of highs and lows and challenges, the concept, I think, is ringing true for where we're going in the future, because of what I may want may be very different than what Andrew wants or what Jerome wants, right? And so where we need to get to is a level of sophistication where we're able to service fans individually and give them more of this sort of microtransaction landscape. And I think you're seeing that in venue too, right? Not everybody wants to eat the same thing. Not everybody wants to buy the same thing. Not everybody wants to stand in line. Some want to be served at their seat. And the more data that we can collect and then create a product that services that fan, the better off that team, league, IP holder is going to be.
And I think you brought up a great point in the intro webinar that we had, and that is just the buying power of the woman. We hold so much of that buying power. So how can they appeal even to the woman who might not be like the #1 fan in the family, but she's the one that's spending the money when they're coming to these different experiences?
Okay, for 20 plus years, I've been talking about how women control 80% of the purchasing power in the home.
We do.
Finally seeing some sort of ripple effects of that, which are great, but we still have a long way to go. Because at the end of the day, the experience really has to speak to the persons who are controlling those discretionary dollars, because they could go to a lot of different things, right? It's not only does all these major markets have multiple sports teams, but here in LA, it's 10, 11 teams. You've got the beach, you've got the sun, you've got entertainment. So, you really have to make sure that your property, your experience is catering to the multitude of things that that fan base may want.
And
Very good.
obviously that opens up a lot of opportunities that all of you have alluded to about opportunities to fill these new needs within the consumer community, be it from, you know, real estate to specialized media to food, which is it's a lot different than it used to be in the old days where you had one giant concession, you know, one stadium and it was plopped in the middle of nowhere and you broadcast on the network television and that was it. So this disaggregation and um, fracturing of the consumer marketplace, I think also opens up a lot of opportunities for new and smaller players. I think, but I throw that out to the panel.
I mean,
Thoughts?
go ahead. I don't know.
Yeah, I think, Constantine, to your point, I think there's a lot of like really interesting stuff that we see in terms of improving the in-stadium experience for fans, right? Like fans are upset about if they have to wait in long lines, like if they have a bad time getting inside or outside of the stadium. And so there are very like things that might seem small, but vendors that are coming to us with innovative ideas and saying, we think this can improve your experience. Like maybe this can make sense for clubs. Whether it makes sense for us to invest in as a league is a different story because sometimes it doesn't make sense as an overall rights holder. It's more of a club decision. But I think things like you go to buy something at the team store rather than having to wait in line to check out. You can just there's obviously technologies that you can just walk out without having to scan your credit card. They can use your facial ID and they know who you are and it saves you time going back to the game, right? There are things like we in the past at 32 Equity invested in Clear, which people are probably familiar with at the airport, but there was a lot of use cases around more efficient ingress egress at the stadium and really improving especially during COVID, some of the health and safety aspects of it. And so I've seen opportunities around more recyclable disposable cups at stadiums, like things. And I think the NBA has done some things in that area. And so I think to your point, Constantine, there's a lot of these, not just for at a sports team level, but like people who are vendors who are trying to innovate and if they can improve the experience for a fan, ultimately the sports team or league can monetize that in some way. And so there's definitely some interest there.
And
Yeah.
from my end, it just cascades down. So, SoFi is the pinnacle of an NFL experience. That is putting a lot of pressure on college teams to make up-level their experience all the way down to high school. And so we've seen, a lot of our portfolio companies can't sign the Nike contract that they just did with the NFL. But we just did a huge NIL deal with Georgia, Alabama, a couple other schools, which much more cost effective and the ability to access athletes at that level. And then I don't know if you guys have been to a high school game in Texas recently. It almost feels like an NFL game. Like just the experience is incredible. So throughout that value chain, it's great that it keeps pushing the envelope at the highest echelons, but that's just cascading down and creating so much more opportunity.
I think that's right. And even to layer on another piece to it is there's all these startup leagues, right, that don't have legacy baggage of a tech stack or a fan consumer experience that fans are used to and can't really, change out of. So will these sort of new startup leagues be able to leapfrog some of the legacy ones by saying, we're starting with a blank sheet of paper, we get to build this from scratch. Can we do it better? Can we build for the future? Because sometimes that's easier than, going to a legacy institution that already has 50 plus different vendors that they work with, that they're comfortable with, and trying to unwind that for something that's more modern.
I think part of the conversation too is all of these, whether it's portcos or whether it's leagues and teams, they're all looking for LPs, and they all need are looking for capital. So I think part of the conversation too, from a legal perspective, is as we're advising clients that are approached with these opportunities, like what's the lens we look at? And so I think from a perspective of a investing lens, I mean, we're seeing more even Silicon Valley getting involved in some of the sports
Uh-oh, we had Jerome freeze for a second.
Oh, I thought it
But
was me.
Cut out, but I think I know where he's going. I think
yeah,
we probably had 15, 20 pitches in our inbox for new leagues that came out over the past 8 months. And yeah, I think the real crux is back to media rights. Yeah, their P&Ls have to build off of corporate sponsorships, number one. But I think the entrepreneurial side of it is how can I actually sign, non-traditional contracts with media? Can I do a Netflix documentary? Can I produce some content for this league that isn't, maybe down the road it materializes into media rights, but it's going to draw eyeballs to something that, it has a fandom, it's building, but if we build the league and can create that content, then it's going to actually draw in more folks that way. So yeah, I'm not sold that the world needs 15 new leagues, but the entrepreneurial lens of it has been really interesting to see how people are trying to crack into what the big four have set out.
Yeah, and sorry for my terrible internet faux pas there, but I was gonna say too, on top of that, what we kind of advise these LPs is, especially if you're making a minority investment, you're probably just along for the ride. You have a limited package of rights, and so it's really your connection with a controlling ownership group where you'll get a lot of information, and you have to be also just very wary of capital calls, and sometimes those calls can be punitive if you don't make calls. So it's really incumbent upon the advisors to let whether it's athletes or whoever it is, let them know like what they're getting into. Some of these can be very lucrative, but there are caveats, and so it's important when you're making these investments at the team or league level to know what you're getting into. The other point I was going to make on Silicon Valley investing is, I'm seeing, 9-figure Series A valuations come across my desk for diligence. And so what that really means is these companies have to get to a Series B, C, D, E, and they get to somebody like an NFL 32 equity to really do well at that level. So, what we're looking for is, founders who can get to a Series B, C, D, who can continue those fundraising rounds more so than just like, the viability of the business idea. So I think some of these things are getting, they're getting so big that they're becoming more institutional, and I just think it's something to be aware of for the LPs that we're advising as well.
Yeah, Jerome, I just wanted to piggyback off one thing you and I think Andrew was kind of hinting at as well, which is we're seeing a lot of interest in new startup leagues and teams, and I think it's exciting, and there will be some winners there and some losers. But Jerome, we're talking a bit about like the capital call requirements and how especially these leagues, like you're not going to have major media rights deals day one, and it's probably going to be a bit more challenging, more operationally intensive, which has cost to it than is modeled. And so, and even if you just look at holistically across leagues across the US and around the world, like the NFL is really an exception in that we have a model where it's very profitable for the clubs, like all the clubs make money because there's fixed player costs based on our salary cap. But most, like if you think about a lot of the football clubs in Europe, like most teams aren't really like that. So as an investor, you're really banking on the long-term enterprise value versus generating your returns through cash flow. And so you just have to be aware of that because that also may have a significant, capital requirement to it where you're just going to have to know you're going to have to fund losses for a handful of years and have the capital available if you're going to be making the investment up front to continue to fund that. And then long term, we're seeing a lot of really significant growth in valuations for teams across, I think, women's sports. Heather can talk more about it, but like the valuations for NWSL teams, for WNBA teams, like they've really, really grown the past few years on the back of really increases in viewership and other consumer demand, but still on a pure cash flow level, that's really trailed. So I think, as you said, Jerome, you really have to go in eyes wide open as an investor.
Exactly, yeah.
And the
Couldn't agree
principal
more.
ownership group is going to do the best. So I don't want to sound like a broken record, but playing the picks and shovels is, kind of our approach. And I'll give you a quick example. TGL, which is an indoor golf league that launches, I think, next month. Tiger, Rory, a bunch of guys said, well, golf's too long. It's multi-day. Nobody's going to spend time watching this. Let's condense it into 2 hours. I hope it works incredibly well for them, but we backed a company called Full Swing Golf that's just building all the technology. Like the check's clear, they build it, it works. If the league does better, Full Swing does better. But at the end of the day, we're not taking an equity risk on this league going well, much more just, hey, we'll build the technology for it. I hope you guys keep going well and put up 4 or 5 of these things. But that's just kind of our view from an investment standpoint of, yeah, a little risky to back, an early league, but yeah, we'll be there to help support it.
I want to piggyback on that and also chat about Angel City a bit at the right time. But I mean, that's what Hextec's thesis really was the idea that you've got all these dollars flowing into team ownership, league ownership, and that's great. It's all premised on the idea that sports properties will continue to rise and that there's this global fan base that we can unlock and new revenue streams that we can unlock. And I believe all that. Challenge is when a lot of those owners go in and they look under the hood, it's really hard for them to understand who their fans are and how they're going to create those new revenue streams and how they're going to unlock that additional value based on a lot of what they've inherited, which frankly, in most cases, whether you're the NFL or even the NWSL, is dated or not up to where it needs to be. And so this picks and shovels bucket that you can sit in, and Andrew, I think it's where we need to spend a lot more time, because the challenge is all these owners, one of the first calls they're going to be making is, who can fix this for me? Who can help me figure this out? Who can repair the car, untangle that sort of set of cords like you have behind your TV that you're trying to figure out where it goes, and is this fan the same fan here, and your spreadsheet. And that's going to take a lot of work. I mean, there are some teams I talk to that have 50 to 80 plus different vendors that help them collect, analyze, and monetize fan data. Just think about that, 50 to 80 plus different vendors, right? And how do you navigate that with a team of an internal team where you're trying to keep your overhead down? That internal team probably doesn't have the breadth of expertise that you need. And also, you don't want to hire or build in-house. That's not an efficient solution for you. So you really need these external partners that can help you figure it out, which, yes, in some cases are, service providers, but in some cases really should be a technology set that can help you come in and clean it all up. And we really like the idea of building a toolbox where, instead of having 50 different tools in that toolbox, can you have maybe 10, 20, 30 different tools that all sync together? You can still buy your hammer or your wrench or your nail separately, but imagine if the hammer, the wrench, and the nail were all integrated if you wanted them to be, so that you weren't in the back end trying to connect the dots and link that fan data. And I think that's where we're headed in the future. And so really excited about the companies that are in that space. There's, from an investor standpoint, a lot of them are kind of subscale or venture-y, it's still very early. But, if you pick the right ones and you're able to build sort of a platform that is a turnkey solution for a lot of these teams, whether they're legacy or startup, that's what I hope to see in the future.
That's really awesome, you guys. This has been amazing, and we're already up at 11:45. We're gonna open up some Q&A. If anybody wants to go ahead and enter some questions into, there's a Q&A icon in your chat. Please feel free to send some questions our way. One of the things I wanted to ask Andrew, one of the things that you mentioned in the intro call, and this is more about players setting up their future when they are investing in these things. And the question that you posed was, how are they able to focus on forming their family office when they're currently focused on playing the game? How are they doing both of these things simultaneously? How can they look out for the future while also, being present and doing their best at what they're doing on the field?
Yeah, and at the end of the day, the main thing is be the athlete. But I think one of the things we see and try to help with kind of financial literacy is, as soon as they sign their first contract, everybody that they've ever met is coming out of the woodwork and, hey, invest in this, do this, X, Y, Z. And, our general advice is do nothing. Just 60-40 stock bonds, keep it vanilla, keep it boring, focus on what you're doing. But how do you surround folks that, rightly have trust issues with, different folks coming after them with the right people? And so, we're not wealth managers, but we have seen folks act in the best interest of athletes, and it really cascades down. My partner's Aaron Rodgers. He's done very well in the league, and his financial representation it's done well for him. And so, we recommend 4 or 5 different folks, and it's just kind of who do you get along with, who aligns with your values, and trying to find folks, kind of the SWAT team of what they do. And where we sit, we're a illiquid alternative bucket. Like, we are a small fraction of what they should actually be doing with their money. So also educating them on like not getting too heavy into alternatives or risky assets, and that dividend growth stocks are actually great tools for you. And so really educating them. And from our end, we get a lot of deal flow from these athletes. And if it's making it to their locker room, generally it's been through, every institutional desk. And so really helping our athletes assess deals, do write-ups for them, different things. Hey, here's some pitfalls we've seen in this arena. If you still want to do the investment, go for it. But it's not an RX3 investment. It's not something we probably recommend you do. So a lot of financial literacy on our end of getting folks up. But what I've seen just over my time here is everybody is really setting up that next chapter of their life, and they can do that on their off day on Tuesday throughout the week or whatever it is. But a lot of interest, a lot of groups. The NFLPA does a great job of educating the folks and giving them the resources that they need. So when that day does come, and NFL's not for long, they have their second chapter lined up.
I want to
Please throw them
echo.
into Fogel and Potamianos for some help too. We've been.
Of course, F&P.
Yeah. I want to echo what Andrew says, which is, part of when we're brought on and we talk to our clients, and they're obviously talking about different deals, media deals, technology investments, etc. We are of the same mind. We're not here to rubber stamp what they want to do. We will give them our unbiased opinion as to whether we think this makes sense, obviously from a deal standpoint, but also from a business standpoint. Have you thought of X, Y, and Z? Have you thought about this pitfall or that pitfall? Here's some other avenues you might be able to pursue with this. And I think that's critical for some of these folks that have become super successful at what they're doing, without having, I guess, developed the experience of business, investment, et cetera, that some of the other super successful business people that we know have, just by virtue of years and years of trial and error, right? So we're trying to help our clients avoid that kind of trial and error, process by lending our experience to them. And we agree with you, Andrew, 100%. It's the team that people surround themselves with that will make or break them, because, we've seen too many people fritter away huge amounts and huge fortunes just based on bad decisions and bad advice. And that's something we want to avoid at all costs with anyone we work with.
Very good. We do have one question in our Q&A right now. Someone is asking, and I'll throw this to anyone who wants to answer. Do you think AI is most impactful for back office functions or for fan-facing, fan engagement functions in your organizations?
I'd say the utility that we're using is back office functions, CRM, workflow processes, things like that, where it's, just human multiplying. That's where we've seen it. Had so many pitches of AI fan engagement, and I haven't seen that materialize into dollars. It removes a friction in ways that it's just amazing. But, at the end of the day, like, a fan wants to meet the player face to face, and you can engage, you can do all these things, but how do you really monetize that? And there are some folks that are on the right track, but I've yet to see it move from utility to here's a new business model. But it's coming. I mean, don't bet against it.
There you go. Thanks for answering that one for us, Andrew. All right, Ty is asking, what's the group's thought on private equity investing directly in college sports teams? And do you see that as a potentially new opportunity for investors interested in sports team ownership? For example, would there be an opportunity to invest directly in the Kentucky men's basketball team?
I can take a pass at that one. I think it's a really interesting question. I think, to me, this model follows what really started the last decade in European soccer, where you had private equity firms, including American private equity firms, going into Europe, investing in commercial assets. So these leagues would capitalize, for example, their media rights or some portion of their stadium business, and in terms of a club investment. But I think sticking with the overall league side, it's typically the media rights, and then a private equity firm would invest, let's say, $1 billion for a share of the profits of the media rights for the next X number of years. And I think, given the college landscape is changing so rapidly with the NIL era, which I'm sure everyone's familiar with, and I can't speak to exactly how the regulations are going to move around, but I think the way you would invest in Kentucky basketball would be if they were willing to carve out, hey, we're going to carve out our, whether it's ticketing and media or portion of our fees that we're getting from our conference. That, I think that's a realistic possibility, especially as some of these teams like the Kentucky, if they're looking to use funds to recruit really good players for NIL from it via NIL, and they're dry on capital, like it could make sense for them to trade off some of their long-term earnings for investment dollars up front. So I think it's a really interesting question. I don't know exactly if there are like which colleges are most interested in that or exactly how it's going to go, but I think that is how the opportunity would work. And given what we're seeing with, Michigan with the NIL and Bryce Underwood, like that does seem like it's the model where the universities themselves are having to pay the players in a certain way, and that requires capital. And so I think models like this could make a lot of sense.
In the works.
Time.
Dana.
It's only a matter of time. I mean, I think
Yeah.
your way you're thinking about the model is right, but it's really just like the European leagues too. It's just requiring the colleges and universities to institutionalize and professionalize their ecosystem a little bit more to get the investor comfortable. Because right now you've got kind of a Wild West landscape where you've got an athletic director over here, a college board of directors over here, who's making decisions. What happens with, companies like Learfield or Playfly that is coming in and giving minimum guarantees for some of those rights. So in addition to having a need for these colleges to professionalize and institutionalize to look more like professional leagues, right? That's one challenge. The other thing is sort of how did college work before, and how can we morph those existing or new contractual relationships and partnerships to set up for a commercial entity type of investment that Alex was talking about.
I want to add too, I mean, because Alex and have you guys hit it on the head, that the administrators, college administrators are trying to figure out, because everything is so fluid with the House settlement, with, potential general managers coming, with the consolidation of college football in terms of the top tier. This is speculation on my part, but I think that there's, let's say, a top 40 teams that are going to be gathered together. Well, there's a race to be one of those top 40. So you look at North Carolina, Chapel Hill, they just brought on Bill Belichick to coach. He brought in Michael Lombardi to be a general manager. I think they want to be one of those, let's say, 40 teams. And so rather than having an athletic director who may stay for 2 years and leave, if you partner with a, private equity, you've got a 10 to 12 year relationship, if not longer, where you have institutional knowledge. Jerry Cardinal was, doing this battle cry last year with Redbird Capital. So I think it's probably going to be the trend that's going to stick around, because there's an interest in terms of returns, and there's an interest from colleges to figure this out. So I do think this is going to happen. What retail investors, can they get involved? I don't know what that's going to look like. I mean, it's going to be institutional, and SEC may lighten some of their retail restrictions on alternative investments, but that's to be seen.
Heather, I also want to make sure we give you a chance. I know you wanted to talk a little bit about Angel City football, and I was also going to suggest throw it out there to our audience. If there are specific segments that you're interested in hearing about, or having folks talk about from a technology standpoint, et cetera, let us know.
Sure. Well, happy to jump in too, and send in questions. But the Angel City ride's been a wild one, and I'm sure there's a lot of headlines out there that everyone's looking at, and the valuations around women's sports that are soaring. But let's break it down to reality a little bit. which Alex, you touched on earlier. I mean, when we came into Angel City, I mean, we're talking about single digit expansion fee, where now we're at like 65 plus for an expansion fee into NWSL, whatever that may look like. So it was very early, timing was good, but it was a flyer. It was a flyer to say, like, is our women's sports going to work? Can we build something that we can really be proud of that is going to have legs for the future? And, we all talk about quality people getting around the table. And I think NWSL has done that really well, from building out the league office to having the right investors get behind it. So there's a lot of good folks and a lot of good, smart money that's going behind women's sports today. Challenges, it costs a lot of money, right? And it takes, you see headlines around an NWSL media rights deal, that we're in a 4-year deal right now. Sounds great, but it's not actually bringing that much money to the bottom line of these teams. These teams, whether you're Angel City or, you're in a smaller market, you're all losing $10 or so million a year, right? Just to ballpark it. And so, you have different levels of revenue depending on your market and your sort of the way those teams are structured. But every one of these teams are losing money, and they need more. They need training facilities. They need better stadiums to play in. The players need more resources. The players need to be paid more. So you have to go into it thinking this is going to be a long-term investment. It's going to take a while to get there, but it will get there. It will get there. We're really excited at Angel City to have new ownership come in with Bob Iger and Willow Bay as the controlling owners. Couldn't have asked for a better family, a better couple to come in and really put their thumbprint on where Angel City is going to be headed for the future. And they're very much committed for growth for the long term. So I think that's great. But, you got to think about as an investor, when, if you deploy your capital into one of these investments, yes, are there capital calls? Are there things that you're going to have to address along the way? But when is there going to be that inflection point in the timeline where you can get your money out and you can get a return? Because you're going along for the ride. And so, at Angel City, for those who came in early and then you have new ownership coming in, there is that moment in time, right? But when will those clubs trade again is a big question for folks who stay in those deals. And a lot of people look on the horizon for when is the next media rights deal, because usually that's trigger for when these clubs will trade. So it's just something to keep in mind as you think about, which teams to go in on, which leagues to go in on, where you can have an opportunity to ride the train for a little while, but then pull your money out when it suits you.
Very nice. Very good. Thank you, Heather. We have one more question in our Q&A as we wrap up our webinar. Someone's asking, we're seeing more teams trying to go to the public market by IPOing a certain portion of their business. Will we see more such events, and would that be from a premium or non-premium properties? Oh, they were referencing Barcelona, FC Barcelona.
I can take a pass at that one. I think probably, I mean, whether it's an IPO or just a sale, probably to some sort of like institutional investor like Jerome was talking about, probably more on the premium property side, just given that's where investors have easier time underwriting the risk profile. Like if you're in less premium property, like say in European soccer, the risk of moving down a level of relegation is pretty tough to swallow when you're underwriting your investment. And then I think just in general, it's a mix of where do teams need liquidity and are like want to capitalize their future, earnings stream. And so it could be you could see more of the like medium tier properties, but I think overall that's where like it's going to start with continue to be the premium tier where there's going to be more investor interest and ability to underwrite.
Well, any closing thoughts?
No, thanks to the F&P team. This is fun.
Thank you guys so much for just giving your time today. I really appreciate you. Thanks for everyone who attended today's webinar. We hope you got some great insight. If you have any questions, please feel free to reach out to us. I'll put our email address. We're at info@fpgeneralcounsel.com. We will send this out. Feel free to share it with anybody in your world that you think will benefit from this. Thank you to all of our panelists for your time and your expertise today, and we will see everyone on the next one.
Thank
Have
you,
a good day,
Christina.
everybody.
Thanks, everybody.
Thanks everyone so much.